Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I've known him for over a decade. He lived in mainland China and also traveled to Hong Kong and Taiwan, all over the place. He helped open up the first General Motors plant in China. He also was an investment manager over there. He ran manufacturing companies. His manufacturing experience in China is extensive, all over China, traveled all over China to manufacturing factories. He probably knows as much as any American that's lived and worked in China. He's the founder of Hippogriff Data Security and also Tyrell Medical. Dan Collins, thank you for joining me again.
Thanks, Jason. Great to be back.
And for my listeners out there, Dan also speaks Mandarin. His China experience is extensive, so I like having him on for insights on the Chinese economy, manufacturing. There's a lot of really interesting China stories going on lately. So we're recording this interview, Dan, on Thursday, May 9th, 2024. The gold price is way above 2,000 at $2,345. The Chinese yuan is at 7.22, right around there to the dollar. But I want to ask you about the spike in private sector Chinese demand for gold. There's been a huge spike for gold demand in mainland China since November. Why do you think that that's occurring lately?
Well, I think gold is also part of the larger commodities picture out of China. We've seen everything the last 1 to 2 months. Everything has spiked double digits, over 25%. Gold in particular, they've had China's had they call it keep gold with the people strategy for more than a decade. As everybody knows, the world's largest gold miner, they don't export any of it, and one of the world's largest gold importers. That just keeps getting stacked up. They sell gold, silver bars at even the smallest banking retail outlets all across the country. So holding physical gold and silver is it's a big thing in China. So what's caused a recent spike, I would guess it's probably related to everything is up. I mean, crude oil is up 43% year over year. Coal imports up 23%. Natural gas imports 120% increase. Copper's up 24% as well. So part of that's part of the story. And then also additional, obviously, globally, we're on shaky financial ground. So there may be some of that involved as well.
You don't think that it has to do with maybe diversification because of what's happened in the other asset classes in China? Now, I know there's been a recent rally in Chinese stocks, but there was articles coming out in January and February from the New York Times quoting Chinese institutional investors, Chinese real estate investors in both like the New York Times and also like Financial Times and The Economist talk about how they had lost faith in Chinese real estate and they had lost faith in Chinese stocks. Well, if you're a Chinese investor or saver, I mean, what types of options do you have then with all the capital controls? It seems like one of the easiest options for diversification out of those other asset classes would be gold or silver then.
That's definitely part of it. That's probably one of the main drivers. Real estate is now dead. So that's been a growth story for 2 decades. I myself have owned property in China and bought and sold, and it's been a huge boom, and that's where all the excess savings have been piled up for 2 decades into Chinese property. Now, everything, depending on where you're at, is down 20-30%. Obviously, your tier 2, tier 3 cities, much higher, but your places like Shanghai and Beijing hold up because that's where everybody wants to live, similar to New York City here. The crashes seem less, but then some of the other hot areas like your Phoenixes or Miamis. But so the real estate as an area to put money is now gone. You can't sell an apartment. The stocks, nobody's ever trusted that because of the boom bust mentality in the Chinese market. So yeah, gold and silver is obviously an easy pathway of least resistance to accumulate savings.
So you think then this rally in Chinese stocks is mostly what foreign investors setting up, what private equity or hedge funds then for Chinese value companies, some of the larger technology companies or other what the Chinese travel companies as they start to consume more oil and start to travel again or go on business trips. But like the average Chinese person then is very skeptical of the stock market rally and they're thinking, I want diversification out of the two main asset classes.
Yeah, I mean, it's the Chinese stock market is incredibly a boom bust story. It always has been. It's been relatively to the U.S. market. It's been dead for years and years. So it could be just kind of a rebalance where it's coming back. It's a different market than U.S. China is a retail market, so it's driven by retail traders as opposed to here where it's driven by big institutions and private equity and hedge fund type groups. So different type of market. It also could be a beneficiary of money coming out of real estate, going into gold, silver, and stocks. So the money's got to flow somewhere. China still has almost $1 trillion annual trade surplus. So when you question why is China buying all this stuff, they got to put it somewhere, and they stopped putting in U.S. dollars in 2017, and so they don't buy U.S. Treasuries anymore. So that's at a all-time low. I think they're down to about $700 million or something, some incredibly low number.
Oh, you mean
Down by
700
about
billion
700
way
billion. Yeah,
from way over a trillion? Yeah, it was
yeah, they
two.
were one. I think they topped out around 1.2 trillion, but they've been slowly bleeding that supply down due to the trade tensions, and the money has to go somewhere. So that's where it's going.
Well, you're talking about the Chinese government, right? So the People's Bank of China, the central bank, because the reserves, the government and the central bank have limited options for where they can park the foreign exchange reserves, the trade surpluses that are accumulated. So their two main options are really only either U.S. Treasuries or gold tonnage.
Yeah, so or physical commodities. So you're seeing all this huge uptake in physical commodities. That also keeps inflation low in China, makes their manufacturing companies more powerful because they have access to low cost materials. It's not going to go back into treasuries, so it's moving around to other things. A lot of the gold, China has always been stealthy on their gold reportings. I think it's similar to nuclear missiles. I think they have a lot more than people know. So they hold money with the state-owned banks, and the state-owned corporations could hold it, and goes right down to the people into their bank accounts. You can hold gold bank account with the top 4 or 5 banks in China. So.
And it's not so stealthy. I mean, the People's Bank of China publicly has admitted to 18 months in a row of gold tonnage purchases, pretty sizable ones. Although I think it slowed down the last month or two because of the higher prices. Maybe they're waiting for some type of correction, but it's still 18 months in a row of net purchases.
Yeah, no, I believe that. But that's just one avenue. My point would be is that's one avenue of purchases. They've got other areas they can even bring in more and hold it, off record.
Well, also for the private sector, the Shanghai Gold Exchange. I mean, I was speaking to someone who works on the Shanghai Gold Exchange last night. He follows me on Twitter and I follow him. And he said he was showing the numbers. There's under 60 days left of silver inventory at the Shanghai Gold Exchange. So, I mean, they're getting cleaned out by private sector silver demand now.
I believe it. Yep. Chinese love silver. Silver tails were the original currency in China, for many hundreds of years. So that doesn't surprise me. When silver gets hot, I used to buy silver bars myself from a few places, and I knew guys taking special delivery of like truckloads. So silver is a valued commodity in China for sure.
Yeah, I mean, back in November, December, when we started to see the big demand spikes, and then I think India also had an all-time high for silver imports too. There was a $3 difference in the price between the Shanghai silver price, or the price for bullion dealers in China, versus the U.S. price. So I think there was a lot of silver that was leaving, like the U.S. and Western vaults, like the COMEX and LBMA, and those vaults are getting cleaned out too, and is heading over to China.
Yeah, that doesn't surprise me, and that's when U.S. is the West in general is paper markets, right? We've allowed paper markets to destroy real price discovery, right? So we don't know the real price when 900, when something, if there's 1 ounce and 900 ounces are daily traded of paper ounces are traded off that 1 ounce every day, it just completely destroys real physical supply and demand market price signals. So getting our vaults cleaned out would not surprise me.
So you think then that the reason that China is stockpiling all this copper, and for our listeners out there, I think the last 3 to 5 months, China has bought more copper to put in warehouses than they have, I think, for all of 2023. They've just bought an insane amount of copper. So you think that's maybe hedging, that they expect to use the copper in the future, or is that because they don't want to buy treasuries? They just figure, oh, we're going to use the copper eventually? Or do you think that this is ahead? They're stockpiling that metal ahead of a yuan devaluation?
So I don't see a yuan devaluation coming. You've seen, so China considers U.S. is not a competitor to China. We export soybeans and we print money. That's our economy. China makes everything like Japan and Korea. Those are the main competitors. So the Japanese yen since 2021 is down about 37%, which carries a lot of implications for the global carry trade. But that's that's a kind of scary devaluation in terms of being out of control. The Korean won's down about 12% in that time. The Chinese yuan's about down 15%. So the yuan is traded against a basket of euro dollars and Japanese yen and other things. China never does any rapid stuff. That I mean, they haven't done a giant devaluation in more than 30 years. So you have to go back to the 90s where there was a lot of like 40% inflation, and it was just a chaotic economy back then. So I don't see a big devaluation. They may take it down. So it's about 7.2 today. They may take it down to 7.5, 8 even, to try to more closely match the Japanese and the Koreans, but they don't really need a devaluation because they are the price leader on everything. Half of everything is now made in China, and you're not going to beat them on price. So why do they need to devalue? They're competing more and more on technology, like the taking over the EV space, 5G, these types of areas.
Okay, so you don't think that they would devalue the yuan for domestic problems with their real estate market or banking system, say similar to what the US and the Federal Reserve Bank did in 2008, 2009, how the US printed a bunch of money for quantitative easing and bailouts to save our banking system, save the housing market and real estate. You don't think that the Chinese banking system is having similar problems because of the falling real estate prices that you discussed?
I don't know. So China will back up. No doubt, the government will always be a backstop to chaos or contagion. There's no doubt about that. I don't think they would do it. I don't think anyone's going to wake up and see the yuan down 10% in a day. That doesn't happen. Could they spread that out over 3 months? Yeah, maybe. Yeah, they could do that. That would be what I just mentioned, 7.2 to 8. That's a pretty good sized devaluation right there. So they could devalue, but it won't be sudden. They will always backstop the general economy. Their government debts are, some people claim they actually know, but nobody really knows. The government debt is, shoved off a lot of times into state-owned banks, although the state-owned banks' official debt, non-performing loans are very, very low. Most of that real estate, keep in mind, was not purchased for millions and millions of dollars. The valuations went up to millions and millions of dollars. But, most people were up until even 5 to 8 years ago were paying cash for apartments. So there's not a lot of, I don't believe there's a lot of negative, unlike the US where we have all this commercial property. China has commercial property issues, not really residential property issues, I don't believe. But there's also politics behind the scene that is taking down these companies like Greenland because these guys are competitors to Xi Jinping's family. So there's other things involved, but there's no kind of financial speculation crisis coming because China's not big on speculation. So there's not a lot of unbacked loans and credit default swaps and all this other financial market shenanigans that go on in the US.
Okay, so you think then that as of right now, unless the Japanese yen gets more devalued, let's say the yen gets to 170 or 180 against the dollar, that the Chinese government's not going to want to do anything drastic with their currency and their exchange rate, but they will monitor that if the Japanese yen starts to get even worse against the dollar.
Yeah, I think if the yen gets to 170, 180, the whole world could be in trouble. And you'll see the Chinese yuan go down with it, but not 1 to 1. So it'll match. It's already trading against a basket, and the Japanese yen is in that basket. So the yen goes down, the RMB goes down, slightly automatically with it, but not at a 1 to 1 ratio. But no sudden devaluation. But they will probably compete more with the Asian currencies as opposed to the U.S. dollar. I mean, if you look over the last 20 years, the Chinese RMB is very stable against the dollar. You literally have a range of 8.3 to 6.4, and it basically trades within that band. And a lot of people think it's kind of ridiculously undervalued because of the growth in the economy. They're now making half of everything. They're world's number one trade partner for everybody, nearly $1 trillion trade surplus. So market economics would say that the Chinese RMB should go up, not get devalued.
Well, but they were running a currency peg though, so it was in a range or a band, right? So I mean that's neo-mercantilist policies. So that's not free market because they wanted to manage their currency, and the Chinese government and their sovereign wealth fund were the ones that ended up managing the enormous foreign exchange reserves that were built up through the trade surpluses and keeping the currency low.
Sure, it's a managed peg and it's not free market, but where's this free market?
Yeah, I know.
I mean, let me know when you find it. I mean, the US government spending has gone from 4 trillion to 7 trillion in 3 years. So, and we wonder where the inflation's at. It's crazy. It's just out of control. So there is no free market. I would say at least China, at the very least, they have an industrial base under as the substrate or the foundation of their economy. So when they run into financial problems, at least there's a real economy backstopping it. Whereas the US, it's just all debt, credit cards, transfer payments, money printing. And now we've run out of room to print more money. So what do we do now?
Stagflate tax life. They're lying about what the GDP and the real inflation rate and the jobs reports, and they're counting all this stuff positively towards GDP that should not be counted positively towards GDP. So, I mean, that's like, it's basically, we were talking before we started recording, it's similar to the Soviet Union or some of the worst economic data from the Chinese Communist Party.
It's beyond, I never thought I'd live to see this, to be honest. This is craziness. It does feel like we're in the Soviet Union. I'm just expecting any day for an announcement to be, well, your daughter can get a job at OnlyFans. This is what we call GDP growth.
Well, wasn't the European Union trying to count like hookers and prostitution positively towards GDP like 6 or 7 years ago? I think they were talking about adding that in.
Right, right. The real economy I see in the US, I've got friends that own trucking companies. You can't give a truck away now. There's nothing to move. The credit card defaults are spiking to 2008 levels. You just had a major investor on CNBC, Barry Sternlicht, say that we're going to see 1 to 2 bank failures a week. And that's mainly over the commercial property issue. These things are going for 10 cents on the dollar already. You saw McDonald's, Starbucks warn of earnings. You've got home foreclosures back to 2008 levels. Down here in Florida, property is dropping dramatically. I think we were down 20%, and it's not getting any press. And the market's frozen. Like we claim there's GDP growth, but how's the real estate market frozen and you have positive GDP growth? We make 9 million cars a year now in the United States, same we made in 1970. Yeah, we claim we have all this great GDP growth. Power generation is going to boom, but we've been basically at the same levels of power generation for 2 decades. We lost 50 to 80,000 factories in the 2008 financial crisis, which didn't come back. Now we're getting a few back, but it's not a rosy outlook. And yeah, China's not perfect; it's got problems. But if you look at the industries, Ford leaves Brazil, Chinese company buys the factory. Okay, they're taking over global markets in key industries: cars, telecom, pharmaceuticals. You name it, they have corporate champions coming out of there that are just running circles around us right now.
And they're also buying excess copper and gold and silver mines in Peru and Ecuador when American or Canadian miners get into financial trouble in the last couple of months too. So I think they're buying assets like good commodities at discounted prices too for looking long term.
Absolutely. Yep.
I want to get your thoughts on tariffs while you were still in China with manufacturing costs and dealing with that. So Trump was raising the tariffs. I mean, a lot of people didn't believe him when he took office. Do you think that if he wins the election again, do you think that a lot of Chinese manufacturers are going to get hurt? Are more factories going to be leaving China over potential tariffs? Or how do you think the Chinese government would react if Trump won the election with potential tariffs going up even more, like even worse than he did when he was in office the first time?
So every Chinese people I talk to, they want Trump to back in. The reason why is they understand Trump. He's a business guy, so he's just negotiate. He's going to negotiate, and he's a win-win, and he's going to want more. They understand that. Whereas Biden is part of this geopolitical doom team that's just wants to start wars with everybody. So they don't get that guy. They want more stability. Business thrives off stability.
That's shocking though, because Trump has said he'll put taxes on Chinese manufacturers even if they move to Mexico. He'll put tariffs on those electric vehicle and other manufacturers even if they move factories to Mexico.
Yeah, but you see, Biden did not change Trump's China policies. He kept the tariffs on, And the talk out of DC for the geopolitics, especially over things like Taiwan, much worse than Trump. We want to pick a fight over nothing. You go to Taiwan, I was there February. They don't even think about getting attacked by Taiwan. But you look at Twitter, it's all we talk about. China's going to attack Taiwan. The Taiwanese, I know some of the richest people in Taiwan. They will tell you if it's going to be a fight, we will not fight because we don't want Taipei destroyed. Taiwan is 3 hours. You can go north to south of Taiwan in 3 hours on a train, and it's just a strip of people on the East Coast. The rest is on the West Coast. The rest are mountains. So you can't even defend Taiwan. We couldn't even defend Taiwan if we tried. We're telling the public that to just try to get more money for the military industrial complex. So I mean that's a whole separate issue. The tariff issue in particular. So I was in favor of the tariffs issue. You have to understand China's not a free market. Okay, they're not operating off free market principles. If you have to go up against a Chinese car maker, they're getting hundreds of millions of dollars in state backing. It's not free market. Free markets never have existed. Only the US listens to free market and they got deindustrialized over it. Japan, Korea, finally China did us in because they're just too dang big. So we can't compete with them. So the tariffs are a good stabilizer to kind of, China's car industry is a perfect example. They have tariff. You have to sell cars in China, you had to make it in China. That's the rule. And then your factory in China had to be 50% owned by a Chinese company. That's not free market, right? Now all of a sudden they leapfrog everybody and they have great EVs at like insane prices, and they're complaining that everyone's trying to block their cars. Well, you did that for 20 some years. So it's not you have to understand in the world's a very practical place. We're not dealing with ideologies. Over here we have this free trade mentality ideology, but it actually never existed. And you just got your country deindustrialized. Wake up.
Yeah, I agree. It was just free trade in name only. I mean, the U.S., since you worked in auto manufacturing for so many years, for listeners out there, Dan opened the first General Motors plant in China. He helped open it. He had to learn Mandarin. It's an amazing story. You should probably write a book about it. Probably be an interesting book. But I mean, wasn't it the 50s, 60s, 70s, the U.S. auto manufacturing, it was getting its butt kicked by Japan and Germany, by Toyota and BMW and Mercedes-Benz.
Yeah, the gas crisis in the late 70s, we started importing a lot of Japanese cars, and they were terrible at the time. To their credit, they invented the Kaizen, the whole Japanese Toyota manufacturing system, got really good at making low-cost, high-quality cars. They took a lot of the market share. But then anytime things would go against them, they would manipulate their currency. Same with the Koreans. Koreans won't buy Japanese cars. Japanese won't buy Korean cars. Nobody's going to buy American car. So the free market has not existed, and it kind of led to our deindustrialization. So you go to the Rust Belt, the empty steel towns. I mean, my home state of Michigan, it's been a 30-year recession. A nation of 330, what are we now, 350 million people after the last couple of years? You have to make stuff. You're not going to just be a financial city of London and just flip credit default swaps. When you're 350 million people, you got to make stuff. You got to employ people, have manufacturing jobs. So the tariffs, I actually, even to this day, I agree with the tariffs. It balances it out. The problem is we have a systemic issue of private equity, all this money printing. They're buying up, private equity's buying up everything. They're buying up even in the healthcare space, they own everything now, the orthopedic clinics, the whatever. And do they own them because they're really good at administering healthcare? No, they're good because they get access to the printed money and they buy it. So this whole printed money,
they're private equity's parasites. I mean, they don't provide any extra value added. They jack up the prices for the customers. You don't get any better products or services. They're actually worse.
No. And they actually most of the time destroy the companies. So 9 out of 10 times the company's going to die.
Well, that's actually the goal. Some of these asset strippers, I mean, they take the company private, load the balance sheet with debt, and the owners of the private equity on the carried interest trade, they're just paying themselves a dividend at a lower tax rate, and the assets of the company are burdened.
Exactly. So how are you going to compete in a global economy? And it's dire. I mean, you look at even our great former champions like Boeing, they're really struggling. Now China has their own commercial airline company. That's why their trade surplus is booming. They don't need to import planes anymore. So how are you going to compete when you have this whole vampire parasite group of people out there asset stripping the country? So
Well,
anyway, the tariffs were a good idea. We need a win-win with China. There's certain areas where we can look now and say, all right, let's cede that territory, like renewables, solar panels. Forget about it. You're 3 generations behind China at this point. Let them take that. But let's get a president there. You're going to do a win-win. We should be selling the crap out of LNG to China, but we don't because they don't want to rely on us for gas because we constantly are talking about war with them. It's just ridiculous.
well,
So
also Biden pulled the
nobody.
LNG permits for the new plants now. He pulled some.
It's ridiculous. It's ridiculous. So you could build a war. The world can be. I always often say this: the world going forward can be a G1 global power one, or it can be a G2. It's either going to be U.S. and China in a G2, or it's going to be a China G1. We have that decision to make.
So you don't think then that some of the factories that are moving from China to Mexico or India or Bangladesh, that's not going to materially hurt the Chinese economy?
Not so much, no. I mean, the Chinese economy, there, and by the way, there is Mexico. There are a lot of Chinese companies there now. Already seen Mexico become U.S. largest trade partner over China. And then you saw that basically what it is the Chinese share just went to Mexico. So they're just doing third country to get around the tariffs. That's the Section 301 China tariff. It's about 25% on any plant from China. So they're doing that to get around the tariff. Trump has said he's going to do 60%. But that's probably just an opening salvo. But then you get other people. I mean, some of these foreign policy dorks talk about cutting China off. Like we'd be Mad Max in 45 days. We would have nothing. Like every productive facility in the country would shut down if the Chinese trade ships stopped showing up.
Are you talking about like the just-in-time supply chain that some companies are still using, how a lot of the parts are still manufactured in China and then there's a stamp saying assembled in the USA to that's marketing bullshit.
Yeah, everything is made in China. Everything. So even things you don't know, it's all made. Everything in Amazon's from China. Everything in Walmart's from China. You see, you have a factory here. They're just doing assembly. Every part, everything's from China. Everywhere from like the subcomponents to the oil to the grease. Whatever you're using in the facility, the very good chance is from China. So we couldn't survive. We're basically so coupled right now with China because they make 50% of everything. We hardly make any chemicals here. We don't make antibiotics. I mean, we saw this during COVID, the supply chain issues, right?
For diabetes medication, yeah, like a lot of it was imported from China or India.
Yeah, it's basically everything. So until we go to the root cause of this whole financial capitalism, crony capitalism that we built up, we change that. They're doing a lot of good things with like the chip manufacturing. They're trying to get that back. And we're building a lot of plants now for the first time. That's part of the electrical capacity demand that's coming in. You got about, I would say, 9 or 10 chip fabrication plants now under construction. So that's a good thing. But then those chips are going to go where? They have to go back to China to get assembled in something. So, yeah, I mean, there's a lot of work to do on the U.S. economy that, but you've got to get some people into the government. If you look at Chinese government, they're all scientists and engineers, and we look like a freaking madhouse.
Lawyers, all corrupt lawyers, all trying to. Right. I call DC the district of criminals, and most of them have law degrees.
Right, that's just insane. Arguing about gender and race, and when we should be talking about jobs and manufacturing and creating prosperous life for our citizens.
Well, most of that woke culture stuff, especially the ESG, because I call ESG the energy spending grift. I mean, they're talking about what all these data centers that they want to build. Mark Zuckerberg from Meta is going on podcasts talking about they want to build data centers an order of magnitude larger for artificial intelligence and the new technologies. People are talking about electric vehicles, Bitcoin mining. All these things require an insane amount of electricity, and yet our grid, our energy infrastructure investments are terrible. We do not invest in smart baseload electricity. So basically the cart's before the horse. You said the CHIPS Act. Okay, we're going to build these semiconductor and chips, but we haven't installed all the cheap electricity needed to build out all the data centers that are planned.
Yeah, it's a coming crisis. And the AI is interesting because I've warned about this a little bit on Twitter. I don't think these companies realize what they're getting themselves into. Personally having owned a Bitcoin mine myself, the amount of power that those things absorb is incredible. And not only that, but oh, here comes the next NVIDIA chip. You got to just change all your CapEx. These guys are throwing trillions in artificial intelligence, which, while holds great promise today, is really just like an additional search engine. And it costs 50 cents every time you search, as opposed to Google's like 2 cents. So they're getting into, these are software companies that are basically getting into management of hardware and electrical capacity. So it's going to be interesting. We'll see if all those bets pay off. I think some of these guys are going to get a rude awakening. But to your point, the electrical grid, we have, 90 some nuclear reactors in the fleet, only one under construction. They're all designed for like 40-year lifespan, and the average age is now 43. So we're completely not replacing our nuclear capacity. The electrical grid's been dormant for decades. Part of this private-public bastardization where, I'm sorry, but private companies aren't going to spend CapEx to keep the electrical grid in top shape. So, yeah, we have a lot of these issues. EVs, AI, all this is and new manufacturing, for instance, the chip, they just absorb a lot of power. All these guys are going to take. We're talking about new, like just from to 2030, they're talking about have to double the electrical grid, from where we're at. So it'll be interesting to see what happens on that front.
So the average person with artificial intelligence, they see, oh, ChatGPT, oh, it's a software program on my phone or a laptop. But what they don't understand, to add to Dan's points, are the data centers, the giant ones. And these are not like old data centers from 10 or 20 years ago. These are next generation ones. And some of them are orders of magnitude larger. By 2030, you have Microsoft and OpenAI planning a $100 billion 5 gigawatt data center. That is absolutely enormous. So we're talking next generation, using an insane amount of electricity. They have to have all these servers and data centers in place that are going to draw tons of copper, tons of cheap electricity that is needed. They have to build those things first before we can have this next generation of technology.
Yep, absolutely right. Those AI programs have to sweep the web, so it's all computation power, and all that computation drives the electrical usage. So that's where it's coming, and that all comes through copper. Copper demand, they're talking about, we're going to need almost 40 million tons by 2031. So that's, up from today, that's about 25 million tons. So we're going to have to double. Oh, and by the way, because COVID and inflation, nobody's been putting new mines online. So yeah, it's going to be a crunch, big time crunch coming in copper. EVs, by the way, EV battery prices in China this year went down 50%. So ICE engines are not going to be able to compete against EVs. So EVs will take over. It's already happened in China. There's 70% of new car sales. And in an EV that uses 300% more copper than an ICE engine. So there's a lot of demand drivers. Originally, I was skeptical because China's going through an inflection point. They don't need to build. They've driven commodities for 20 years, right? That's been the China story. Now they don't need that build out anymore. It's built up. They've laid concrete over the entire country. But I think what will save copper and maybe send it to new all-time new highs for sure is this demand between EVs, AI, and electrical grid build outs.
So for Dan's point there about commodities, I think it's selective commodities, because maybe not as much iron ore, not as much steel as or aluminum as in the past for China, but for key commodities like gold tonnage to hedge currency devaluation, inflation globally, food, agricultural commodities, and then cheap electricity. I mean, investing across the board, coal demand, despite all these ESG policies, anti-fossil fuel, anti-coal from the U.S., European Union, all the countries in the G7, anti-coal and coal demand hit an all-time high in 2023, mostly from China and Asia.
Yeah, the forecast for what they call Asian coal fleets. Oh my goodness, it's scared of the heck out of you. It's just the rapid demand that's what's crazy about the climate change thing, is that CO2 is not going down; it's just only going up. So, and it's very strange to me.
Well, I mean, the U.S. voluntarily reduced carbon emissions because they switched to cleaner natural gas. But I mean, China is building coal-fired power plants. They're just upgrading it to clean coal technology. They're putting the scrubbers on the coal-fired power plants. I heard they've been retrofitting all the old coal-fired power plants. They've been putting the clean coal technology scrubbers on and they're still building one new coal-fired power plant per week.
Yeah, so CO2 in the U.S. went down about 40% over a decade. As you mentioned, that's a lot of that switched from coal to LNG, but then also we lost 50,000 factories. So we kind of deindustrialized. That helped reduce CO2. That all went to China. Yeah, China's still building one new coal plant a week, but you got Indonesia that is modernizing, India, some, Africa. There's a lot of places in the world that are still industrializing and burning coal. And yeah, the whole CO2 globally is going up. It's not going down. So
Well, that's because China and India have an exemption from the Paris Accords, right? So you have all these politicians and bureaucrats from the US and European Union talking about, oh, we need to eliminate internal combustion engines and fossil fuels. But if China and India have an exemption from that, I mean, like none of the stuff they want is going to happen.
Yeah, it does nothing. It's like a drop in the bucket. That's why I always crack up when I see even small countries like yeah, the Netherlands. Okay, everybody, we're not going to take showers for 4 days a week. Like, what are you doing? That does nothing. All you're going to do is make the country stink.
Well, I mean, the U.S. put the sanctions on what Russian oil, and India bought as much as they could. So India's like, okay, it's at a discount. We're going to buy as much as we can. I mean, the Indian electricity demand the last 12 months it's almost a parabolic chart. There's factories moving there. They're definitely like upgrading their infrastructure, buying copper, and building new power plants.
Yeah, they took the majority of the Russian oil, went through India, got processed, and then sold back into Europe for a higher price. So that was a definite own goal by Europe, and Europe continues to see the factories shut down, the chemical plants leave. BASF is moving a bunch of production to China, world's largest chemical company. There's a whole town in Germany that's basically a chemical company, and they're like hurting. They have to leave now. So Europe's making it untenable to do business. Even the car makers are getting out.
Isn't BASF moving at least one of their factories to China?
Yeah, they're moving some massive factories to China, several, and shutting them down in Germany. So Germany was built off cars and cheap Russian energy, and now they shut down their nuclear power plant and they shut down Russian oil. It's really like a suicide pact by the government. So
plus their solar and their wind, I think they had to bail out Siemens. So Siemens for solar and Siemens wind, because they were trying to trying to switch over their electricity generation solely to solar and wind, and that has failed. So I think like they're looking at enormous natural gas imports or restarting nuclear soon.
Yeah, they spent an insane amount on the renewable plan. It was something like $500 billion or $1 trillion, and it didn't. Then they found out, oh, we don't actually have that much sun in Germany. So
well, maybe with the cold weather there. Well, actually, yeah, they don't have geothermal though up there in Scandinavia and Iceland and Sweden, some of the other countries, so they can't do the Bitcoin mining at a cheaper electricity cost.
Right, which is I always wondered why Europe doesn't run hydropower down from Norway in that. I mean, it seems like you could do that, but anyway, it is what it is.
So for our listeners out there who are not familiar, you actually ran a Bitcoin mining company. Can you talk about like electricity costs and how much electricity Bitcoin mining uses each month?
So back when I was doing it, I got caught in like kind of the boom and the bust. Like I set up leased an entire factory space. Couldn't figure it at a pretty good electrical rate. At the time, you needed to be around 5 cents a kilowatt hour to successfully run a Bitcoin mine. This is around 2017, 2018. And I caught the run up from like 3,000 to 20,000 in Bitcoin, but then it crashed back down within like 2-3 months. So all of us, and I was starting to get power bills from the city of like $80,000 a month. And then I shut it down. Bitcoin had crashed, so I just shut it down. I wasn't going to keep bleeding money. In hindsight, I should have just like kept going and took it public because there's like billion-dollar Bitcoin mining companies that have fewer machines than I had at one time. But it's like an AI game. You're managing massive electrical draw. Every month, I need a new if you want to increase, you need new transformers. Does your area have the power for you to even pull that much power? Your facility is not sized right because you're just running a few computer servers in there, and you got this whole big empty space. So it's managing Bitcoin mines actually like kind of running an AI den. We had GPUs. That's what we ran. We ran for some non-Bitcoin stuff. We ran GPUs, and then Bitcoin we ran ASIC miners. So But yeah, I got crashed out in the crash when the crash happened. But yeah, so it's fun times though.
So you think though that going forward, the cost to mine Bitcoin with the electricity usage and just the cost of running the factory and all the servers, the equipment needed is going to keep going up, similar to gold mining?
Yeah, so like on the equipment side, those NVIDIA chips aren't cheap. They're 40, $50,000. And then 2 years later, oh, they got something new comes out. And all that money this happened in Bitcoin miners. We had a S9s. Then a year later, something new comes out. All your shit's obsolete. Like, oh, I gotta go buy a whole new Bitcoin miner worth of equipment to compete to find the Bitcoin. That this AI is going to be very similar. Like, oh, I to be successful, I got to go get all the latest NVIDIA chip. Means all my data centers with all my NVIDIA chips aren't any use, and the power charge you suck up. So they're very capital intensive businesses, which I don't think these software companies realize. They're not used to dealing with capital. They're used to dealing with people.
Yeah,
But
they're used to higher profit margins. So if Microsoft makes like a Microsoft Office product, that's a high profit margin product, and they're not spending $100 billion to build out a record-setting data center, and then all the electricity bills that are going to come with it, and all the capex and equipment switches for new technology and chipset you just said.
yeah, exactly. It's a totally different game than what they're used to doing. It'll be interesting to see who there's going to be. I'll guarantee you there'll be some spectacular failures. We're gonna see some.
Well,
We'll see some companies get stopped out on the investment side.
it sounds like with all the new technologies and the chips and stuff, that the safer bets for this long-term trend with the data centers, artificial intelligence, Bitcoin mining, all this electricity usage demand that's going to keep increasing, and the projections for by 2030 are insane. I've seen projections out there where the electricity usage globally could double if all these new data centers are built, Bitcoin mining, electric vehicles, all these other things. I mean, the safer bets for that trend, Dan, and China's playing a large part in that, are going to be like copper and then all the baseload electricity generation sources rather than betting on a specific technology for a chip.
Yeah, I know. I totally agree. The base metals are kind of a surefire thing because you're not getting rid of copper, you're not replacing it. You're going to need the copper, but then it's also that old gold mine adage where you sell the jeans and the pickaxes, don't dig for the gold. So that's NVIDIA. They don't even have to build their chips, right? All that real work of building the chip, managing the people, paying the power bills, managing the factory, that's all by TSMC, where NVIDIA can just design something and sell it for a 800% profit or whatever they make. So yeah, sell the jeans and pickaxes. Electrical infrastructure. I think even utilities are probably going to catch a bid here pretty quick.
Dominion, which is the one that runs, well, they provide the electricity for the majority of data centers in the state of Virginia, and Northern Virginia has the most data centers, I think, in the U.S. and the most under construction right now.
Absolutely, yeah. Global hubs is Virginia for sure on the data centers.
The other stocks that are actually starting to bid up, and there's a lot of billionaire investors, hedge fund managers that are starting to pay attention to this trend. A lot of it was talked about in the new book by Lawrence McDonald, Listen When Markets Speak. I think that's his new book that's called. He was a former vice president at Lehman Brothers. He wrote a book on that, and in the Bear Traps report, which is a popular newsletter, and he's been talking about the data centers, electricity usage trend. The other set of stocks are these data center real estate investment trusts. There's 5 or 6 of them, and they're going to be managing these data centers, making sure like the electricity is taken care of, the maintenance, that type of stuff.
Yeah, absolutely. Yeah, I think their business is going to grow. It's guaranteed to grow. So, that's always going to help the stock price.
So for playing China going forward, you think some of the trends in place are going to be what people hedging all fiat currencies and inflation with gold and silver, whether it's a devaluation of other currencies, and then also what food and energy, those are going to be long-term trends for people in China too?
Yeah, I think for China, so today I work with a lot of Chinese companies. I work with Chinese companies that have $8 billion in sales, 10 billion in sales. So there's going to be in China is going to also switch to it as this massive global exporter, but it's going to it's already a massive global importer. Although it does. I mean, McDonald's today, I think they announced 5,000 new stores in China. They're going to open. Imports, I think they import $3 to $4 trillion a year. That's probably going to double, right? At some point, they will replace the United States as the world's largest importer. They're already number two. So the problem is you can't compete with Chinese companies on most stuff. So the president of China was in Serbia yesterday, announced a free trade agreement with Serbia. Serbia can now export anything out of Serbia to China, 0% tariff. So you're going to see China focus to get their economy back. I think more on imports. That's just a natural extension as the countries become richer. It's middle income. They will be a global juggernaut in imports. So that'll be the next place to look for China for 10, 15 years. I never have played the stock market in China. I never trusted it. Real estate I mentioned is dead. That's not an area to look at all. But yeah, I think supplying the Chinese market, helping Chinese companies go overseas is a big area as well. So that's what I see for China. I think they've largely escaped the middle income trap. How rich they get per capita basis is going to be tricky. They have demographic problems, which I'm sure you're aware of, as a lot of countries do. Not as bad as Korea, but I think their actual replacement rate is probably much less than one. In the official numbers, probably like 1.8 or something. So long-term trend. They also have this issue of education. So when I moved to China in 1998, lived there full-time over 20 years. When I went there in 98, 5% of people had a college degree. Today, 60% of people are getting college degrees in China. So they don't have the factory workers. Those people aren't going to go work in factories. They would rather go work in Starbucks than work in a factory. So all that factory has to leave. Not all of it, but there's going to be plenty of room to set up manufacturing outside of China.
So you're talking about like maybe a Chinese manufacturing company then starts moving factories to Vietnam, which is not far from China. They move the cheaper low-end manufacturing for Walmart goods, or Amazon gets moved to Vietnam for low-cost labor.
Yeah, that's already happened. I was in Vietnam a few months back. You can't even, it's hard to even get land now to build a plant. They've been there for 10 years and they're all over the place.
For long-term trends for China, I mean, some of the top trends seem to be like energy usage increases. So like coal demand, natural gas increases, nuclear power, and then even oil demand is starting to firm up again with Chinese traveling, business trips, and traveling for leisure. So oil demand seems to be increasing. The other one I think is calories. So a lot of Chinese people are eating way more calories. That means more meat, more proteins, more agriculture. The agriculture commodities index has been soaring for years now compared to a lot of other commodities and even other asset classes.
So oil is an interesting one because Sinopec has said China has hit peak oil this year. So why? Because 70% of the new cars are EVs. And they're now doing a cash for clunkers program to get rid of any ICE engines that are left. So within 5 to 7 years, you're not going to see an ICE engine car. Usually Chinese in 7 years, they scrap the cars.
Okay, taxis, yeah, but Dan, you've managed supply chains. Can like you actually run a supply chain, say moving like hauling goods? Can you do it without diesel though? Can you do it on an electric vehicle, like an electric vehicle pickup truck? Can you actually run a supply chain on that?
Right now, the trucks would still be diesel, but you can't get rid of the entire car fleet and not make a dent in oil sales.
Yeah, I mean, diesel, I see the goods. So like the goods being moved to the grocery store or to Costco, like those types of places, the goods still need, because you need reliability, and diesel is still more reliable. But I could see like all the taxis. So like in the city, I could see electric vehicles because they're not.
It's beyond taxis. Like nobody's buying ICE engine cars in China. It's 67%. All the new cars are EVs. You go there now, the cities are completely quiet. It's all EVs. China's leading this change, and the EVs, have 25% of the components that an ICE engine does. ICE engines are last century's technologies: cranks, pulleys, hydraulic fluids. It's all mechanical engineering stuff. The EVs, now we're starting to, you see the Teslas coming down in price. The EVs are going to flush out the ICE engine cars based on price, just on cost, because they have so many fewer parts. Each part, you have to imagine, has a whatever that little part is, has 300 or 500 workers attached to it to make it. So they just are not going to be able to compete. So Sinopec, as I mentioned, has said peak oil for China already. So I
But then
don't.
wouldn't the demand then switch from oil? It would switch over to what, natural gas. China has to import a lot of natural gas either via pipeline or liquefied natural gas, and then also what, coal and nuclear power.
Yeah, the electrical grid will boom because they're not using the oil. So yeah, the electrical grid will be running all the EVs, all the renewables. So there's no change in terms of the power they have to generate, but just in terms of what type it is, what type the source is.
And do you think the Chinese consumer, are they going to have more purchasing power? Are they looking at going and shopping and traveling more, or do you think that that's calmed down a
The
lot?
it's come back a bit. The Chinese economy in general right now is still bad. It's not good. It's I know people that have factories that they're just go on vacation. There's no orders. What happened is COVID, they shut down COVID way too hard, way too long, and they didn't print money and give it away like we did here. We printed $7 or $9 trillion and just gave it away. And then we've increased our government budget, as I mentioned, from 4 trillion to 7 trillion on a per annum basis. So COVID went away and we're still spending 7 trillion. So that's just like almost double the government spending, the biggest spender on the planet. So they didn't do that. So there's a lot of economically scarred people. Restaurants closed down, they never opened back up, and gyms. I think the largest private gym company in China announced bankruptcy this week. So they're at this inflection point. It's all built up. They benefited from the urbanization, the building, the airports, the cities, the hospitals. Okay, that's all done. And now you've got all these people that are now college graduates. Like, how do you find 100 million jobs for college graduates? It's not easy. So there's this big, I think it's a five, and I've said this, it's a 5 year, there's going to be a 5 year turnaround in the Chinese economy to try to find new footing. It obviously can't do it on exports. It's already exporting half the world's stuff. So it's got to be from domestic growth. So I think they've got to unleash the imports, let them come in and enrich everybody's lives in China. So
So you think then that, like, the old playbook that the Chinese government used for the last 25 years of what, the infrastructure investments, the fixed assets, the real estate, the home building, they can't do that as much anymore. I mean, the return on investment of building, say, 4 or 5 airports in Shanghai or Beijing, they can't do that anymore. So what are they still going to be looking at infrastructure? Are they going to build out these data centers for new technologies? What do you think they're going to be looking at for investments for infrastructure and new technologies?
yeah, that's exactly right. So all of the old model stuff will not work. The AI data centers and all that will come. I don't think that will match what's going on in home building and things like that, though. Um, they've already got enough airports. So I think there was that one time I think they had 70 international airports under construction. So I don't think we had that many bridges to nowhere projects, but we could see that happen. That could really take off. But yeah, they've got to find the new. Obviously, they're moving up the value chain, right? As I mentioned, telecom, EVs. They became the world's largest car exporter this year. So they're making 30 million cars. The United States, we make 9. Um, we have one shipyard left. The United States made one container ship last year. China makes 1,000. So they're so big now. They're trying to build the global South. You may have seen that, like the Belt and Road and all these. They're trying to build up East Europe, Central Asia, Africa. They're by far Latin America. They're by far everyone's largest trading partner. By far, it's not even close. And they're trying to build those guys up as external markets, and to extent, it's working. Like U.S. percentage of their global trade is down to like 17%. Like literally, they could turn us off, and
Well,
they
weren't they more interested when they invested in, say, like Peru or Ecuador? They're interested in access in Ecuador to the oil and natural gas, or to the
Yep,
new gold and copper discoveries. So they're more
yep,
interested in getting access to secure supply of these commodities.
yep. And they have a new port under construction. If listeners want to Google this, it's quite interesting. But they have a new port in Peru, which is going to be like a massive hub for South America, between South America and China. And they're building that out now. And yeah, they're taking over large swaths of the South American economy as we speak. Like I mentioned, just one example: Ford got out of Brazil after 120 years, and BYD bought the factory. So we're moving out; they're moving in.
Well, Ford and General Motors, we've discussed this in past interviews. I mean, they're not being run very efficiently. You've talked about the wage problem with the United Auto Workers, but I mean, like both those companies have wasted a lot of money in electric vehicles that are not selling. Didn't Ford take like $9 billion of taxpayer funds, about some insanely large number, and they spent a lot of it on electric vehicles or share buybacks, and it has not worked out for them.
Yeah, the Detroit's EV plans are in flux right now because the demand has seemed to drop off a cliff in the United States. Obviously Tesla's still doing okay, but even they have cut prices. And the Detroit guys are kind of going to the hybrids now. They think that's kind of a bridging strategy, but it's not a great long-term strategy. When you're trying to run an ICE engine company and an EV company, it's like running two companies. So I never saw these guys be able to compete in an EV world against companies like Tesla that manage it like a software company. It's just hyper speed, continuous improvement.
Well,
Mm.
Well, also with profit margins, Dan, and you know this, like the best profit margins for Ford and General Motors, it's either their luxury sports cars, the major gas guzzlers, or their large sport utility vehicles. For Ford, it's the F-150 pickup truck. I mean, they were selling those things. I don't know what they are in the last couple months, but at one point they were over $100,000 recently.
Yeah, that's where their money center is in those vehicles you mentioned for sure. 10 grand a car profit usually. Where they make nothing, go farther down, they make nothing. So yeah, as long as you can keep getting 80 grand for a big SUV, you're fine. So in many ways it's smart. They manage they went to where the money's at, but then when it shifts, how do you shift back and stay in business?
Well, bailout time, because I mean, the consumer right now, we're seeing auto loan default. I don't know if you're watching these videos, but like at Carvana and CarMax, like there's tons of people going to these used car lots and nothing selling. The dealers and the used car dealers and the regular dealers that sell used cars, they're just stuck with tons and tons of inventory. People are defaulting on their monthly payments for car leases.
I have seen that. Yeah, I've seen, and car leases got up as high as like an average of really like $600 to $800 or something, a crazy number. And yeah, the market has stopped. There's a lot of economic indicators in the United States right now that are flashing red, but we don't see it because we underreport in inflation, which gives us a positive GDP number.
Well,
So
also, I think the individual companies, Dan, for a while, they can get away with, adjustments on their earnings and lies and stuff like that. They can hide the truth for a while in their quarterly earnings reports. Like with Carvana and CarMax, I don't think people are in their financial reports. I don't think people are seeing the reality of like the videos that the people go to the car lots and nothing selling, and they're marking everything up, and at the auctions on repos. So these
right,
car dealers, right, when a car is repossessed, they sell it at an auction, and like these cars are going no bid.
I know. Yeah, I believe I see it. I bought a car last year for $150,000, probably worth half of that. Now, about 18 months later. So I'm feeling that pain. I bought at the high. And prices have come way down, and then nothing's moving. I think the year over year, the total market has slightly gone up, but it's not what people forecasted. But imagine what's interesting. Imagine the GDP calculation is basically consumption plus investment plus government spending plus your net exports. Now, government spending is the largest one of that in the United States GDP, and we basically doubled that, and we still have like a 1 or 2% GDP number. If we had not doubled government spending, we'd be seeing minus double digits on the GDP. Think if we really reported inflation as it was, and we kept government spending to sustainable, not even a sustainable level, but I'll say less crazy number of 4 trillion a year, we would have minus double digit GDP numbers in the United States.
Well,
So
that's also the Keynesian cross what you described, because Murray Rothbard argued that like government spending should be subtracted from GDP because he said the government cannot allocate capital efficiently. Look at all the money they've wasted on these ESG and electric vehicles here in the United States, and a lot of the companies, the electric vehicle ones, that were pure plays, not Tesla, but a lot of the other ones are already filing for bankruptcy.
it's craziness. Yeah, it's ridiculous. And it's weird because China has so many state-owned companies, and they were never as efficient as private companies, but they set up a system to where the state-owned companies compete against other state-owned companies, and they compete against the private sector. So in many ways, they became very, very efficient. Whereas the US, we can't manage anything from government level. It's just insanity. I remember the $1 billion for the Obamacare website, right? That went down, didn't work for a website. You know what I mean? So they just the money that DC throws around just it's beyond out of control. And
Well, do you remember that infrastructure bill that Biden passed within a couple months after he got into the White House in 2021? They spent $5 billion on electric vehicle charging stations, and I think they only built 8 of them already in the last 3 years. And I think all 8 of them have immense problems and don't work correctly.
it's crazy. And who's getting fired over that? And California, 9 billion on a stretch of high-speed rail that is like 9 miles long or something. It's like that
And
just stopped. And
the
it's
whole project, I think, was
and
supposed to cost like 30 or 40 billion for a high-speed rail from like San Francisco down to San Diego, and they've already, I think, allocated tens of billions of waste. And then there was all these people on that were trading on inside information on the land deals, buying the real estate where the high-speed rail was going to be located, and so it was all land schemes.
God, yeah, I don't. That's California. It's all land schemes.
Well,
Um,
also DC. DC does that on a way with DC. There's white collar criminals here doing that on way larger scale now, my friend.
yeah, I believe it. I believe it. It's end of empire shit, really, is what I call
Exactly. Well, I've been at parties here now. I was at a barbecue on Labor Day last year, and there was people who pulled out their smartphones who had $1 million on their stock market trading account. And they're acting like weren't rich, and then they had a house like in a nice neighborhood, like Langley Great Falls area or Potomac area, Maryland.
it.
Acting
Right.
like, oh, I'm not rich. Oh, I just only have $1 million on my stock market trading account.
A lot of Ukrainians had to die for that money.
I mean, like, Boeing and Raytheon and Northrop Grumman. I mean, like, they get a lot of the funding passed for whatever they want, so they can beat earnings.
It's outrageous. It's almost like this is ammo shell shortage we have, 155 millimeter. We pay $6,000. Russia pays 600. You could almost just say, screw it, set up a government company. But what you'd have to do is set up 2 government companies and you make them compete against each other. So, but when you're paying 6,000, it's almost like healthcare. At what point do you just say this system is beyond repair? So, like the defense sector, U.S., it's insane. 6,000 for artillery shell. I mean,
Isn't a lot of the stuff also still manufactured in China, the supply chain?
they have strict rules, FAR requirements in the defense sector, where the country has to be on a list. China's not on that list, but there's probably, I think it was the head of Raytheon or somebody was on CNBC saying we have thousands of suppliers from China. We can't cut them all. So there's a lot of Chinese stuff anyway that's going to get in the supply chain, even if as tier 2, tier 3 stuff. So yeah, it's out there.
So this decoupling from China that people talk about, like Xi'an, it sounds like it's almost impossible at this point. I mean, like, I guess some factories can move to Mexico, but it sounds like the Chinese companies are moving factories to Mexico.
These guys like Zahan are completely clueless. They've never had a real job. I question if they've ever stepped foot in a factory before. So they don't understand the real global supply chains, what's actually going on. If you stop things from China, it would literally be a Mad Max situation here. There would be nothing. Every shelf, every Amazon, there's nothing here. We'd have nothing. So,
well, we already had a preview of that in 2020, right? Because the supply chain shut down and the Chinese manufacturing, there was not a lot of that. So there were shortages.
but take that times, 10x, that's how it would get bad. So it's not just a matter of, Mexican companies aren't as capable as Chinese companies. Not just a matter of, find some Mexican company to make it or American company to make it. A lot of times the skills are gone. So you take an LNG carrier. I mentioned China makes 1,000 container ships. Now they also make LNG carriers. China makes LNG carriers. The United States literally doesn't have the technical capability to make an LNG carrier. They've done the studies. Like we would have to import like hundreds of guys from Korea just to make the cap on the LNG carrier. So,
well, Korea makes almost all the ships. Korea makes most of the ships, right?
They're big. Yeah. They're like 30% share for sure. China's like 50. Japan's got some Nordic countries. But, yeah, you have to go back to the root cause. Why we can't how can a nation of 330 million people, with 350 maybe now, with this much land, our labor rates are actually not that expensive.
We have the cheapest natural gas too in the world.
The cheapest natural gas, that should be an absolute major weapon in our economic arsenal. Is, our LNG. We just should be killing people. So, but you have to go back to the root cause. Why the hell you can't make anything here? And I tell you, it's like a lot of regulations, a lot of weird labor laws. I mean, you get sued for the dumbest stuff. There's just, the healthcare, right, is a burden around people's necks. Other countries don't pay healthcare for their workers. So yeah, there's just, you need a whole re-system boot. Like trying to like put Band-Aid on this economic carcass is not working anymore.
Okay, last question here. I want to ask about the just-in-time supply chain. So do you think then that the just-in-time supply chain, is it over? Is it going to adapt? Is it going to be drastically changed over the next 5 or 10 years? And do you think then there's going to be more reshoring where China buys more locally from other Asian countries or trade partners only, and the US buys mostly from Mexico or other trade partners and tries to divert away from China?
So I'm pretty heavily involved in supply chains. One of my companies over the last few years, we've done about $100 million in business. A lot of that's imports from China, and exports. So I have a really good, constantly have something in the air or on a boat. The supply chains are largely steady now. There's actually more getting bought from China. Like people can't believe this, but actually we talk about reshoring, but if you go, the Chinese companies are so competitive now after they've automated that you can't compete with them. So there's a lot of talk about, I mean, reshoring, but actually didn't happen. We threw about 50 billion into the chip, so there are some chip plants getting built. There is some manufacturing moving, but really, and the duties to China, that really helps India and Mexico. It hasn't helped the US so much. So I'm still not seeing the groundswell of manufacturing growth that we're going to need in the United States. And that's really the ticket to getting out of our debt problems. If you start making stuff here, man, it's just a positive economic cycle. The jobs, you employ 100 people, they employ another 200 from their wages, right? So it's just a positive economic cycle that happens, and we need to get people off. You got countries now, Jason, like England, 64% of the people are on welfare. It's just a staggering. I don't know what the percentage is in the US, but if you talk about all government payment programs, I would bet we're nearing 50% of the people.
Well,
You know,
this is what happens when you don't have a lot of free markets, and then they put all these rules, regulations, taxes, red tape on small business and entrepreneurship. So it's difficult to start a startup or a small business, and it's difficult to grow it. And that's where the majority of the jobs come from. So when a
Sure.
large corporation, the share price, Dan, you worked at General Motors. When General Motors cuts labor costs, right, doesn't the share price go up?
Yeah, that's the crazy thing, right? Is that a terrible jobs report comes on and everyone in Bloomberg cheers.
No, I was talking about specifically when the company says, okay, we're going to cut labor costs by 20%. We're closing down these plants and firing, and we're doing share buybacks. And then all of a sudden, the investors in the company, the share price goes up.
Yeah, the share price goes up because they're getting rid of cost, and you're hinting at one thing that's really changed the last few years. People don't have this on their radar yet, but remote work, COVID taught people that they can do remote work. So if I'm going to pay somebody doing remote work, why am I going to pay 150,000 to someone in the US? So these guys, you're seeing a lot of the big Fortune 500 do layoffs. Those jobs are never coming back. They're hiring in India, they're hiring in Mexico. If someone's going to remote in, I'm going to pay someone overseas a couple $1,000s a month as opposed to 10,000 a month or whatever.
Yeah, we're
So
we're seeing this now with consulting companies here in the DC metro area. I mean, they have a lot of staff like Booz Allen Hamilton, Deloitte, Accenture. They have a lot of staff in India, and they're getting paid a lot less money than an American worker.
yeah, and I think that's COVID has accelerated that. So you're going to see a lot of Fortune 500s clear out of American white collar employees.
Well, I've kept you for over an hour today, Dan. I want to thank you so much for your time. I always enjoy my conversations. I learned so much about China and the supply chain from you. Also, the auto market. I mean, the auto market's just very inefficient with the bailouts and the misallocation of capital and all these problems with General Motors and Ford. These are not like free market companies from what it sounds like.
No, they carry a lot of health burdens as well, right? I mean, they have massive workforces that are retired, but they're in general, to your point, they're not run efficiently at all. They're dinosaurs. They just don't know it.
Yeah, they also have all those pension fund obligations too. General Electric had those too. That and General Motors and Ford have very similar problems.
Correct. Yep. And yeah, it is what it is. Out with the old world, in with the new, I guess.
My listeners want to follow your work. How do they do so?
Probably best place on Twitter at Dan Collins 2011.